What's going on, everybody? Gonna give about 5 more minutes, and then we're gonna start it up. All right. All right, can everybody hear me? How's everybody doing? Awesome, awesome. Doing great, doing great. Glad to have everybody here. Okay, so we're going to be covering how to find TTM squeeze opportunities tonight. We got one more class Friday. Hope you guys can be there. So before we get into dive into the scanner, because I know a lot of people have been asking about the scanner settings, I want to cover some things that I don't think at least I know I haven't covered enough about, I haven't talked enough about, mainly being the mindset that you need to have to be a consistent trader, first of all, because that's what everyone should be aiming for, right? And then actually going more in depth and giving you ways to really build a watch list, because that's where this all stems from, is building a watch list. That's how you build a system. That's how you even begin to make money. Is you need something to pick from. So we need to start from the basics, right? We need to go to the core and figure out how do we build a great watch list, basically. Okay, so first of all, we're going to start with the nightly prep. You could say nightly slash morning prep. Each and every night slash morning, you should be doing an analysis of what occurred in the particular session. It's important that you log your trades, keep track of your watch list, and keeping track of your watch list can be very beneficial in several ways. Now, what do I mean by doing analysis of what occurred that prior day? What do I mean by logging my trades? What am I talking about? Everyone should have a notebook, a tablet of some sort. Everyone should be logging each day's activities. Every day that you trade, I want each and every one of you to have a notepad next to you, writing down the tickers that you plan on trading, why you're even selecting those tickers, and the levels that you plan on executing your trades at. You should always have you should always be logging these stems of information down on a notepad. That way you can actually go back and see what did happen to the tickers. If anything did happen, you can see what tickers may have rallied that day. Check out your analysis. You can see why you even were looking in that direction. Got a question, trend, writing down why you entered and exited. Yes. You want to be sure to record market settlement and build a list with tickers that support direction, overall market direction. It's equally important to follow tickers that are moving opposite from the flock. These could be potential hedges. So, as I'm sure many of you already know about using hedges to combat losses. Let's say you take a um, calculated trade, on a very high probability pattern that you saw previously, and you wanted to jump in. I don't want to say prematurely, but before the breakout happens, right? It's always smart to hedge your positions just in case the market goes against what you were anticipating. At least you will be on the side that essentially the market was on if it didn't work in your favor. So you'll lose in one, but you'll win in the other. So hopefully, uh, if your position size are correct on both entries, you should make it out. You should survive. It's critical that you mark levels on tickers you plan to trade. I want everyone to check multiple time frames and to get better acclimated with understanding tickers and where they're potentially heading. You should, in a sense, already know where you want and where you plan on entering and exiting a trade before even placing the trade. I know one of you mentioned this already previously. This also applies for taking profit. Before you enter a trade, there should be a target or a percentage of some sort to ensure you're utilizing your trading rules. Now, what does this all mean? It's very important that you guys are, making a blueprint to what you expect is about to happen, right? That way, when it does happen, you'll be ready to execute at will. You know, if you're just waking up and just looking at charts and you're just placing trades wherever, it's not gonna end too great for you in the long run. That those aren't habits that you want to form. You wanna create great trading habits, and that's gonna build consistency. It's very hard, but nothing good comes easy. If you follow your plan, your trading rules, you'll be fine. I promise you. Let me see. Do we have any questions? Any mistakes? So the biggest thing would be preparation. Preparation. No matter your trading preference, you need to be properly prepared. Trading is a performance-based environment. I'm sure we can agree on that. No one is going to hold your hand to execute trades. You failing to prepare for the trading session ahead is equivalent to an NBA player not showing up to practice who expects to perform come big game. It's just not possible, right? If you want the results, you have to put in the work. There's no way around that. There's nothing different with this than anything else. If you want the results, you have to put in the work. You get out what you put in. I firmly believe that. You have to think you're competing against some of the sharpest minds in the world and should treat each moment in the market with such respect or the market will humble you. After creating the blueprint for the given trading session, you should take time to relax and clear your mind. I really want you guys to start getting into the habit of meditating. Why can meditation be good for you? Can anyone tell me? Why is that a good thing? Does anyone here meditate, by the way? We already have someone that may meditate. Yes, focus, mindfulness, clear your mind, reflections. Yes, all great answers, all great answers. Yes, I want everyone to take 10 to 30 minutes to visualize your plan in action. Every detail of execution should be marked to perfection. You should be training free of emotion and free of fear. Use that feeling of loss for what it is. A big loss should come as a lesson to you, reminding you of the results of not following your plan. We've all done this before. We've all went against our trading plan, but I just cannot stress enough how important it is to follow the rules that you have set, that you have created for yourself. Instances where you see things that you've done in a pattern and it worked for you, don't go against that. It worked most of the time for a reason. Keep those rules, keep that discipline. The hardest thing in this in this entire grand scheme of things is going to be discipline. It's going to be how bad you want it. How bad will you discipline yourself, your wants, your needs, your desires, your fear? It's all going to come down to discipline. I promise you. So I want everyone to start, getting to where they can get at least 10, 30 minutes to just reflect on things, to meditate, to really clear their mind before they think about trading. And if you get to where, you're just not so, in tune with yourself, we all have days where we just have other things going on. Those days where you can't really focus on the charts, where you can't focus on what's going on, you want to take that time and step away from the markets, right? This is a serious thing, especially when you're putting your hard-earned money at work. You don't want to come, as some people say, half stepping. You don't you want to really come correct. You really want to come prepared, because no excuses. There's no emotions. No one cares about what's going on in the market. The market will not. The market will not save you at all. Okay. So now we're going to move into scalps, day trade setups. Uh, just some my rule of thumb of how I actually go about finding tickers. I had a lot of questions about how do I actually find these setups? How Axelrod, how do you find these moves? How do you find these setups? How do you find all these tickers? How do you build your watch list? I'm going to show you guys everything that I do to build my watch list, from the nitty gritty, every single thing, not holding back. So a great way to capitalize on squeeze setups is by first dissecting the top 10 holdings in each major sector. Now, I'm sure you guys have already been through some of this. I just want to make sure that we really touch on this, because it all starts with your watch list, guys. Like, that's where the source of everything starts from, is a good watch list. Like, you can't even begin to trade without knowing what you're aiming for, right? If you're a sniper and you have no target, how are you going to snipe, right? So I'm going to show you guys what I do and what some of you may start doing or could start doing to build a great watch list. We're going to follow the money. Now, why are we interested in following the money? Why do we want to be where the money's at? Right? That's probably a rhetorical question, right? We want to make money. We want to be where the money's at. Trading options allows us to follow those bigger money moves. It allows us to take advantage of following where big money's going. Big institutions frequently hold positions in various stocks within numerous sectors. Scanning through the fluff can lead to big opportunities. The squeeze will give you indication to the direction in which we're looking to execute. Anyone here? Anyone here follow sweeps, or they look at flow? Anyone here that uses flow? Maybe open interest, really pays attention to that kind of stuff. How many of us? Sometimes I do. Okay. Yeah, Flow Algo is a site as well that gives you some insight. I'm not going to talk much about it. Just it can give you a visual of where big money is positioning themselves now. Anyone with a couple of hundred thousands of dollars, even a couple of millions of dollars, can show up on those sites. So very well possibly could just be somebody trying to make a earnings bet. It doesn't necessarily mean that, oh, okay, this is where A hedge fund is positioning themselves, right? Or multi-billion-dollar institution is positioning themselves. So you got to be careful with it. Now, it can give you some indication of where big money is going. So I'm not going to completely discredit it. Um, just want everyone to get accustomed to following where the money is actually going. That's where you want to be, especially if you're trading options. You want to go where the money is going. Yeah, channel in the group that shows it. Yeah, it's amazing. So you first want to head over to Zax. There's several websites that you can use, but you want to. Me personally, I use Zax to give me a list of tickers that I could possibly search. And you're gonna go to funds. You can go to Zax, and then you're gonna go to funds and click the funds button here. Once you click the funds button, it's gonna pull up. Click ETF. It's gonna pull up ETFs that are in our market, and these are basically. Can anyone tell me what an ETF is? Any idea what an ETF is? Yes. It's basically, think of it as a conglomerate of different tickers. It's like walking into a grocery store, right? And you're just having everything. It's a lot like what ETFs are. So we're gonna check out a few of these. I'm gonna give you a sense of how I build my watch list because the scanner is great. Don't get me wrong, the scanner is awesome. But you're gonna have times where you're just not gonna have that many um, squeezes that you may prefer to trade, right? Like you're always gonna have a squeeze. There's always gonna be a ticker out there squeezing, but it may not be a ticker that you're comfortable trading if you understand what I'm saying. Um, you want to get into the habit of trading various tickers, but getting into a rhythm of knowing how that ticker moves. So eventually, that comes down to you kind of slimming the list, right? Picking your go-to, like your go-to tickers, right? And you should have go-to tickers in each sector. You shouldn't just be trading, just two stocks, right? Just have a couple of stocks in each sector and watch them. You don't even have to trade them. You could even create a paper account and just trade them on paper account, right? And just get acclimated with how they move because you guys are really gonna want to buckle down and understand how money moves, right? Can anyone give me any clue of what rotation means? What I'm talking about rotation. Yeah, sector rotation. Money moves from sector to sector. Yeah, we have different things going on. You have big money repositioning themselves, entering or cashing out on funds to make their money work in other places. Just basically reallocating funds in a nutshell. So knowing that, when you start seeing a wave of big money flowing into tickers, into ETFs that typically they haven't, they've been quiet lately. that could give you some small indication that, hey, maybe a rotation is about to happen, right? They're starting to reallocate some of their funds. Maybe something's about to happen. Maybe somebody has a tip on something, getting ahead of the crowd, right? We have a lot of rotation going on right now. Um, I don't know if many of you remember, but I called a last week that we were rotating out from some of tech into the Dow, with Boeing being one of them, right? I've been talking about preaching Boeing for days now, and we all see what has happened today. So just be aware of what's going on in these various sectors so that you can capitalize on them. Okay, so we're going to start with XLF, right? I'm just going to do a couple of these. I'm just going to pull up some of these tickers because maybe some people haven't seen these tickers before. Maybe they didn't know what how big of an importance these tickers play. But you guys can really build a strong watch list from just really just sitting down and just reviewing some of these tickers, seeing how they move, especially if you're utilizing the TTM squeeze indicator, right? So just see. So I have my charts pulled up. Can everybody see my Thinkorswim? Okay, so we have a question. Is this list building pre-market or should you review it the night before? Now, me personally, it's just me personally, I build a watch list the night prior, right? Like if I know I plan on trading or maybe I'm going to trade, or even if I don't know if I'm going to trade the next day, I'll at least build a watch list the night before, and I'll go and pre-market and I'll check those same tickers that I was looking at, and I'll see what levels have been broken, or maybe we bounced off of a certain level. Just kind of like checking the list to see, if there's been much movement. Because if a stock's already made a big move that I was looking to get in on, I don't want to be in that trade, right? And why is that? Why wouldn't I want to be in a trade that has already made a move? Some people may say, "Oh, well, they're buying it up. I want to be where you said you want to be where money is. So, why not go after that? Why would I may possibly want to sit that one out? Chasing because the move already happened, could catch the end of it, get a reversal. Yes, yes, yes. It all goes back to ATR. Do we know what ATR means? Y'all know what ATR means? Average true range. Yes, each stock has an average true range, an ATR. That means typically how much a stock will move in a given session, right? So if Bank of America's ATR is like, I don't know, $1.50, and it moves $4 or it moves $3, then that's pretty big, right? It's it's already made the move that it typically makes, and that's just typically. Now we do have times where stocks make bigger moves, but just playing it smart, you want to take in consideration that you've already missed the rally, like you missed this train. So move on to the next setup. There's always the next setup, guys. Don't ever get to where you get so wrapped up in a trade. You study, study, study. You did your due diligence, and you really want to get in on this trade, and it happens without you in pre-market, and you just so gunshot that you just want to get in, and then it reverses on you, and then you've broken every trading rule that you've put in place, right? Now you got to start back over, right? So don't be that guy. Don't be that person. So let's see. So we're looking at XLF. So some tickers. Let's look at JPM. I'm gonna show you guys what I look at, what I do. Feel free to write some of this down because actually you could be building a watch list for tomorrow. And if you guys have any tickers that you want me to look at, feel free to drop some in the chat, and I'll be sure to check them out. JPM. So I don't genuinely trade JPM. I genuinely trade GS really, and sometimes Bank of America, but JPM is a good one. Let's see. So we're squeezing. We're beginning to squeeze on the 30-minute. Looks like we are on the cusp of. Looks like we're trying to fill some of these gaps. Actually, so a good push above 105, this 105.50 level, could quite possibly send us to 112. So that's like a $10 move right there. It's like a $10 move. So Facebook is in a 1 hour squeeze. We'll get to that. So I'm not gonna beat a dead horse. Check out the weekly though. Let's check out the weekly. Not bad. All right, what's some more? What's some more that's in Excel left? Bank of America. It's weekly. It's interesting. So right here we have Bank of America releasing from this 4 hour squeeze. So what does this tell us by these histogram bars here on Bank of America, guys? What is this telling us with the squeeze and the histogram bars? Bullish momentum. Yes, correct. Like Bank of America. It's like we're trying to break out of this range, 26 range. We could very well see a nice rally, depending on how these tickers hold up. We've already seen a pretty nice rally, but we could definitely see some more. GS. GS right now is back in this range here. We see what happened last time we got in this range. We sold off. So I'll be looking to see if we can break past this range. We've already filled some gaps. Sent a 15. It's releasing from a 15-minute squeeze. That'll be something I would note. I would definitely put in my my notes. I would write GS. And I would write releasing from 15-minute squeeze. That's something I would be watching pre-market to see, did it go back into a squeeze or did it release from the squeeze? Did it already make its average to range, the move? If it did, I would take it off, knock it off my list. That's why you need to have several tickers, guys. You don't just need to watch one or two tickers. Like have several tickers, go through them, keep track of them, see what they're doing, and then you narrow it down after pre-market. Narrow it down to about two tickers, and really just execute on those. Apple. Yeah, we'll get to those. Let's check out. Let me go back. We're gonna look at. We're gonna jump to the next ETF. Let's check out XLV. So on XLV, we have some tickers like J&J, UNH, PFE, ABT, Amgen. Let's see. Let's see. J&J. So J&J looks pretty nice on the weekly, guys. Look at this. What kind of pattern is this? What do we have here? What's it forming? Anyone see that with the naked eye? It's a flag, right? I definitely be writing that down. Bullish momentum. Let's check it out. Always start like higher time frame and work your way down. Oh, look at this, 4 hour squeeze. And look, guys, we're sitting right below a critical level, right? Look what happens every time we get to this level. Just chop, 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 chop. Just been chopping around this level. Finally got a squeeze. Last time we got a squeeze at this level when we chopped inside the level, we exploded above, but we rejected. So be looking to see if maybe we retest some of these highs here, right? Retest of that 157. Let's check out the daily. Oh, look at this. Look at this. Look at this. We're squeezing on the daily charts. So it's a pretty long flag there too. So J&J, especially with all this coronavirus news, right? They are a pharmaceutical company, right? So I definitely be keeping tabs on that. This could be huge. This could be big. You know, if you get in at the right time, right expiration date, get the right direction, depending on, future news or whatever have you. This looks like almost a dragonfly doji, which is bullish. You got a lot of buying power coming in. So I definitely would put J&J. Look, that's a squeeze. I'll be a squeeze play right there. Definitely put that on the list. Let's check out UNH. Right. Oh, let's check out UNH on the. Let's check out the weekly first. Okay, so weekly looks like we are flagging. Looks like we're appearing to be trying to break away from this flag, break some of this range here. You guys see that? It's like we have a lot of solid plays. Hope you guys are getting some of this. You could potentially make some good money here. I read an article that actually the healthcare sector was one of the best ones to be reallocating funds. So go figure that UNH is making these moves. We got a question. But in general, the squeeze can be followed by a strong move up or down, right? Correct. Think of the squeeze like a rubber band, right? Think about a rubber band. Think about now imagining you pulling the rubber band up from opposite ends, right? You're pulling it, you're stretching it out. That rubber band eventually is gonna pop, right? And it's gonna release in one direction or another. Either the right side is gonna continue to move, because the rubber band is gonna pop and it's gonna, just from momentum, just your arm is gonna continue to go right, or it could go left, right? The squeeze is the same way. So imagine when a stock is consolidating, that's like a rubber band because stocks need to move, right? And so when you get a stock that's just really not moving, that's that energy begins to build up. And so when that rubber band pops, that's the stock essentially popping from that range, right? Oh, that answered your question. So UNH, check out the daily. Wow. So on the daily, we are actually releasing from a squeeze. We have bullish momentum. Looks like we're getting kind of caught up on this level right here. So I would say a clear break above this previous high would be an indication that we're probably going to continue this move, right? So we're on the fourth bar. How many more bars do we have to go typically on the squeeze release? Anyone tell me? We're on our fourth bar. You have 8 to 10. So yeah, typically we have at least 4 more bars to go. And that doesn't mean that on this next bar we're gonna just shoot up, guys. Somewhere between the 1 and the 10th bar, you have a higher probability of going higher, continuing to exit that range that it's in. So it's trading in a range right here that we can see this range is trading in, right? And we can see it moving away from the range and it's consolidated a bit. Now that's not a bad thing because think about when you're day trading, right? Or you're scalping. When you see a stock rallying, you don't want to just hop in when it's rallying, right? Because it could just reverse on you just as easy as it's rallying, right? You want a breakout. And if you don't catch that breakout initially, that burst of momentum, you want to catch it when it starts to slow down before it makes, you want it to rest, essentially. You want it to consolidate. So right now it's made a nice move up from the range, about almost a $10 move, right? And it's just consolidating right now. So it could be getting ready for the next push higher. If buyers step in, maybe they get it at a discounted price somewhere at, I don't know, 300 or so. Maybe they'll come back in and push this thing higher. So I definitely be keeping UNH on the watch list. It looks like it's releasing from a 30-minute squeeze as well. It's releasing from a 15-minute squeeze as well. Guys, when you have like multiple squeezes happening and multiple squeeze releases happening, you want to take note of that. That's not coincidence, right? It's this thing working together. Like that's what you want to see. You want to see multiple squeeze releases. You can make money just off of one, just looking off one chart, but when you have these multiple charts doing some of the same things, that's powerful. You want to lock in on that and really grab it. All right, so we're looking at UNH. Let's look at AMGM. Made some money off of this ticker before. AGA. AMGM. Okay. Loading, bear with me. Did I spell it wrong? Oh, thank you for that. So let's check this out, right? So it's releasing from the daily squeeze. But we have momentum going to the downside. So we have a squeeze. Check this out. This is a perfect example, right? You have a squeeze, it's squeezing, then you get bearish momentum, right? Pointing to the downside. You have the red histogram bars pointing to the downside, and what happens? We go lower, we go lower. I'm interested in seeing if we continue to go lower. or do we find support of some sort here? Looks like a double bottom at 216, 215, 216 level. Do we continue higher, or do we sell off? It's kind of flagging right now. It's pretty steep flag. Check out the weekly. Want me to hide my volume bars? Yeah, let me edit my volume bars real quick so you guys can see the squeeze better. Let me do that for you. Sorry about that. Is that better? All right. So the weekly, it's looking okay. Wouldn't be my favorite ticker, right? Skip to the next one. Let's check the next sector. So we did XLV, which is healthcare. Let's check out XLK, right? This is going to be technology ETF. So you have like Microsoft, Apple. I saw a couple people talking about Apple. Check out a couple of these. So what did we say? We have Microsoft. And what do you know? We have a 1 hour squeeze. Doesn't look like it's really picking a direction. Go bigger picture first, right? So bigger picture, weekly chart. We got some bullish momentum. Looks like we found some support at about 181, 180 level. Looks like it's flagging a little bit. Like it looks like it wants to break out, possibly make higher highs. Could possibly see 191 in the next week or so. I'd be on the lookout for this. Let's check out the 4 hour chart. We have been squeezing for a while. Been squeezing for a very long time on the 4 hour chart. We've been squeezing since the 20th, 21st, basically, of May. So a lot of chop, a lot of chopping here. I would definitely keep this one you know, on your watch list. This probably won't be one that you would take any action on until it cleared levels of resistance. Maybe if you wanted to dip buy, you could possibly dip buy and catch it at a 180 level if it drops again. But definitely wouldn't be looking to play this until we get some breakouts, maybe a breakout play on Microsoft. But it's squeezing. It'd be a good opportunity to write some calls, right? Or write some puts, right? Sell some puts. Could come down here and sell these 175s, right? It's really failed to touch this level, and when it has, it's bounced. See how well this is held over time. Looks like a pretty relevant level to me. What do you guys think? Yeah, it could squeeze for a very long time. Gotta have a question. How do we know the direction when it's squeezing? So you want to take in consideration when the market sentiment is. Where is the market heading, first of all? And then you wanna look and check the histogram bars. So right now we're getting mixed signals. And I mean, if you just look at the chart, it's all over the place. Just look at it. I mean, this isn't pretty here. Just because something's squeezing doesn't mean that it's tradable, right? That you could just trade it like any other breakout play. It's some real indecision here. Lots of consolidation. So I just either I would look to play a bounce play with a long expiration if you wanted to possibly take a bounce play and then take the breakout, hold it while it breaks out. But I mean, it's riskier, right? You could possibly day trade this thing if it came down and touched this 180 level again, right? Like it did here and it bounced from that level. You could do that. You do several things. You could come down here and sell some puts at 175, buy the 173 call or puts, to sell the 175s and buy the 174s for protection. You can do it that way. Uh, Squeeze on the 1 hour chart, but see, it squeezes on multiple charts. So I mean, it's a great thing. I would definitely keep it on watch. Just wouldn't be top of my list as of right now. Let's check out Apple's. A couple people mentioned Apple. Looks like Apple released from the 15-minute squeeze, and it's releasing from another squeeze. It's also looks like it's flagging here. Everybody see this? So anyone remember when we were talking about writing calls, selling premium? And I clearly I did an Apple chart, right? And we drew a zone that Apple was trading in. So imagine if we had went through and we sold those puts, right? We've moved even higher from the point now than where we originally were at when we first did the webinar, right? When we first did the class that day. We've moved even higher from that point now. So you would definitely be either in max profit or close to it, right? More than likely. I mean, those puts are just dying away. Anyone that bought those lotto puts are hating themselves right now. You guys see how that works? High probable setup. Hasn't even come close to touching that level, right? I mean, we were talking about selling puts down here at 312, guys. Like, not even close to that level. We're a whole $13 away. So we have a 1 hour squeeze. Let's back up and just look at the bigger picture here. Bigger picture, we are on the cusp of making higher highs, it appears. We're on the cusp of breaking all-time highs on Apple in the midst of a coronavirus, right? And a pandemic. We are about to make higher highs. What does the TTM squeeze tell us about Apple's direction, about its momentum? What is it telling us right now? Bullish, green, yes. So you guys want to be writing all of this stuff down when you're making your watch list. Everything that I'm pointing out, it needs to be the same thing that you're training your eyes to watch as well. And the more things that you have stacking up against each other, like multiple time frame squeezing, bullish momentum, it's near a level of resistance, or even it's about to break all-time highs. Those are things that you want to write down. You want to record those things because those in a way can be a catalyst of some sort for you, to give you more conviction, to why you're even looking at the trade, why you're going to be executing the trade. You want to have all of these things written down so that you can reflect on them, so that, let's say that maybe it didn't go your way, at least you did do your due diligence, and maybe there was some news that came out later, or just the trade, the setup didn't work, right? And maybe it did work, and at least you'll know what you did to execute that trade successfully. You could keep utilizing and reusing, recycling those same things over and over and over again until you just start to compound your interest, start growing your account. That's all that it is. So 4 hour, We are releasing from the 4-hour squeeze, right? So this is something that I'll be writing down. We're releasing from the 4-hour squeeze. We're at a critical level of resistance. Releasing from a 4-hour squeeze, I'll be looking to take calls above this level, right? We failed to break this level time and time again. I would also look to see if we held above this level, I would be looking to sell puts again at a dip. If we came back to retest this level, maybe to resistance turn support, I'd be looking to sell puts, right? You guys seeing how this works? How you can use a squeeze to capitalize on the breakout plays, capitalize on the swing plays, to capitalize on selling premiums at the same time. Using like 4 or 5 different strategies all in one day. All right. So that was Apple. Let's check out MA. I don't think MA gets enough love. MasterCard, MA. Check out MasterCard. So guys, do you see all these squeeze opportunities that we're already finding? Like, is everybody seeing, like, literally, there's every day there is new opportunity. So I don't want to hear anyone, jumping into a trade because they're afraid that they're going to miss out, right? Like, there's opportunity every single day. You just got to go out there and find it. And I've already given you the keys to the city. I've already given you the way to go out and go find these setups. Say right, Visa is also squeezing, right? So it looks like if we look a little closely, what is this telling us about MasterCard? What are these histogram bars telling us? Bullish, right? So got a lot of bullish momentum. Looks like we may be trying to approach this 316 level. So that's something that I would note. If we dipped again, I would be looking to possibly pick up calls to see if we ride this to retest that level of resistance, right? What happened last time we came there? We touched that level. We sold off. Check this out right here. We sold off last time, big time. That was like a $24 drop. Actually, it was more than that because we dropped even more. Came back and bounced and dropped even more. Dropped another $12 or so. So this could be big. Check out the 1 hour. So we're releasing from a squeeze on the 1 hour. Again, guys, are you guys seeing this? How this is working, right? It's working cohesively. 4-hour squeeze, hour squeeze, working together. I'll be keeping track of this. MasterCard is known to make big moves. I mean, just look at this. Just look at this explosive move. That was like a $10 move straight. Like, it's like a train. The thing about MasterCard is like when it moves, when it picks a direction, it's gone. It takes off and it keeps going. It doesn't stop. So if you catch this momentum at the right time, it could be powerful, guys. We're talking about 100% returns in minutes, like literally. I love to play MasterCard. So here's a question. So if it was releasing from a squeeze on the 4-hour, would you primarily be looking to take swings? It depends on what market was looking like. If I'm having a choppy market and MasterCard is releasing from the squeeze on a 4-hour chart, I probably wouldn't be looking to swing because we have a choppy market. There's no telling what we can get, and I don't want to risk profits, to just gamble my chance away of if the market's going to continue in that direction. So what I would be doing or looking to do anyway is I would be getting a plan together of where I wanted to execute that trade. And I would